Welcome to Mayor Brown's Tech Talks podcast. Each podcast is designed to provide insights on legal issues relating to technology transactions and keep you up to date on the latest trends in data, digital, outsourcing, and software by drawing on the perspectives of practitioners who have executed technology transactions around the world. You can subscribe to this series on all major podcasting platforms. We hope you enjoy the program.
Welcome to the second season of our Tech Talks podcast. In 2020, we delivered our first season of podcast episodes. For 2021, we intend to keep on bringing you a timely and relevant selection of content with a greater range of speakers and topics. I'm your host, Julian DeBell. I'm a senior associate in Mayor Brown's technology transactions practice. I'm joined today by 6 of our technology transactions partners: Brad Peterson, Lei Shen, Joe Pinnell, Marina Aronchik, Rohit George, and Rebecca Eisner. We have brought this team together today to help us look ahead at the year to come, which in some ways is also going to be a look back at the year that just ended. 2020 was a year of many things. Among those things, though, it was clearly a year of forced digital transformation. We worked, shopped, and lived at home like never before. Web conferences went from a novelty to a daily routine. Companies that had assumed that functions could only be done in an office learned to do them at home. Vast amounts of additional money and data have flowed into the hands of technology providers. Today, we'll talk about some of the possible effects of those changes on some of the key technologies and issues that our practice focuses on. We're going to talk about these focus areas in roughly the order that they rose to prominence over the last 20 years, starting with managed services, moving on to data privacy, then to cloud computing, followed by big data and data monetization concepts, and then businesses built on the cloud, and finally to emerging issues in the use of artificial intelligence. So back to the beginning, managed services. So managed service outsourcing in all its forms and flavors, IT outsourcing, business process outsourcing, offshoring, and others. This is in some ways where the technology transactions practice began, and it remains a core focus. So to talk about this, I'd like to turn to Brad Peterson, who leads our technology transactions practice. And Brad, what do you expect for 2021?
Julian, we've been seeing tremendous interest in managed service for a while. The obvious driver is that a lot of companies are hurting financially and outsourcing can help. But the pandemic has had other more subtle effects that are boosting the amount of managed services. Before the pandemic, companies had never tried to do most functions remotely, even though the technology was there. They didn't know if it could work, and they hadn't documented and re-engineered processes to make remote working work. Now, as you noted in your introduction, out of necessity, companies have done what they needed to do to make remote working work. And that's removed a massive barrier to managed service outsourcing for many companies. Also, the pandemic has highlighted some of the value of resiliency, not just in having business continuity and disaster recovery plans, but also in having contractual rights to exercise in circumstances like this. Suppliers needed to choose among their customers, and customers saw business value where they had secured a firm contractual commitment to deliver acceptable services at a reasonably firm price. Relationships mattered, but so did contracts. So we are seeing clients more focused on the contract terms, particularly the contract terms protecting against unlikely events like another pandemic or similar event.
Okay, what else should we be looking out for?
Well, I'd look out for a continuation of the trend that we've been seeing over years of transformational deals. What I mean by that is a managed service outsourcing transaction where the supplier takes responsibility for a business function and then agrees to transform service delivery using tools like robotic process automation, artificial intelligence, cloud, and other technologies. Over 2020, we increasingly saw transformative back office deals involving committed savings of up to 50% while improving service levels and resiliency. That, of course, justifies the additional risk and investment of a managed service deal. We also saw our clients increasingly implement their own customer-facing digital transformation through transformative managed service deals. So I'd expect that we as lawyers will see more, larger, and increasingly complex transformational deals as 2021 goes forward. Finally, we expect continued convergence of managed services with other deal types. The pandemic has accelerated the trend to digital as the way to interact with customers, so it will also accelerate the long-standing trend to expand the managed service model across a company's value chain. The pandemic also gave greater prominence to supply chain functions as a whole, so lawyers should expect to see greater integration among contracts for the goods, the services, the data, and the technology supply chains. And the pandemic highlighted the fundamental similarities in those supply chains. So we expect our clients to be applying ideas and techniques from other supply chains to managed services. All of this convergence is going to increase the reach and the value of the managed services model, and as a result, we as lawyers should expect to see it growing over 2021.
Oh, thanks, Brad. So another long-running focus of the technology transactions practice is privacy and data security laws. For this, I'll turn to Lei Shen, a partner who specializes in data privacy. Lei, what do you expect to see for 2021 here in the United States?
Thanks, Julian. Well, to say that a lot happened in 2020 with respect to data privacy is quite an understatement. Data privacy stayed true to the general 2020 theme of anything can happen, and as a result, we can expect even more excitement in 2021. Some of the biggest developments in the U.S. in 2020 involve the Ccpa, or the California Consumer Privacy Act, which came into effect at the beginning of the year. And then at the end of the year, the passage of the California Privacy Rights Act, or CPRA, which amends the Ccpa. So what does this mean for 2021? Well, one piece of good news is that the CPRA does provide a bit of a runway to prepare. So 2021, thankfully, will not mean a mad scramble to prepare for the CPRA, since it comes into effect in 2023. However, the CPRA does start applying to any data collected starting in 2022. So companies will need to start their initial preparations for that, as well as start considering any updates they might need to make to their vendor agreements to address the CPRA's changes to the CCPA's service provider contractual requirements. In the meantime, we can expect to see further developments with the CCPA, including further revisions to the CCPA regulations and further enforcement actions. However, with the current California Attorney General recently having been selected to join the Biden administration, it's not clear if the AG's prior focus for CCPA enforcement actions will continue if he should leave. We're also keeping an eye on copycat CCPA-like laws that are being proposed in other states, and of course at the federal level. Washington's proposed Privacy Act, for example, has come back for its third iteration, and the third time might be the charm here. And while several states had proposed consumer privacy laws in 2020, 2021 might be the year that other states finally pass CCPA-like laws. It's also worth noting here that there might be a heightened focus on privacy and cybersecurity with the new Biden administration, given Vice President-elect Kamala Harris's focus on privacy when she was the California AG, and also with the recent SolarWinds hack that has impacted both government and private companies alike.
Okay, a lot going on just in the U.S., and that's not even counting the rest of the world. What can we expect to see outside of the U.S.? What should listeners be keeping an eye on?
Well, if you think there's a lot going on with data privacy in the U.S., there's even more going on around the world. And one of the biggest things we're keeping an eye on, of course, is EU data transfers after Schrems II, and in particular, the finalization of the European Data Protection Board's draft recommendations regarding supplemental data transfer measures. And we're also waiting to see the final versions of the updated EU standard contractual clauses. A number of other countries have passed or proposed stringent data privacy laws in 2020, such as the new LGPD in Brazil, and also proposed laws or amendments in China, Canada, and India. So we'll, of course, be keeping track of how those play out as well.
Glad to hear it. Thank you, Lei. All right. After privacy became a critical concern on the tech transactions watch, we started to see an explosion of cloud computing and as a service technologies. For this, I'm going to turn to Joe Pinnell, a partner who's been leading the ABA's work on cloud computing for almost a decade. Joe, what do you expect for 2021 in the cloud world?
Thanks, Julian. We're seeing rapid acceleration of the move to the cloud at our clients. They're much more rapidly moving from on-premises software solutions to SaaS solutions, including ERP SaaS solutions from companies like Oracle and SAP. They're also quickly replacing their conventional, dedicated, and shared data center hosting deals with hosting on large cloud platforms like Microsoft Azure and AWS. Now, none of these moves are necessarily new, but the rate of change has gathered a ton of momentum. Before the pandemic, we would see clients renegotiate their large-scale IT outsourcing and data center deals, and they'd migrate maybe 30 to 35% of their applications to SaaS or cloud platforms, either as part of those renegotiations or as part of parallel SaaS and cloud contracting efforts with new providers. These companies were dipping their toes in the water to figure out what could be migrated to the cloud, but there wasn't a ton of urgency. The trend in the past year has flipped that on its head, with our clients more inclined to migrate something like 65 or 70% of their applications to SaaS or cloud platforms as part of their various contracting efforts. McKinsey in May of 2020 said that we have vaulted 5 years forward in consumer and business digital adoption in a matter of around 8 weeks. We've seen the same at our clients. And as a result, many of them have had fixed asset investments that were at best oversized and in some cases completely useless. This has led to them asking their providers to take their bespoke data centers and replace them with cloud and as a service offerings with bill by the drink or utility style pricing. A lot of this is also being driven by the economic effect of the pandemic. Companies want to immediately cut costs and replace fixed costs with variable costs from a cash perspective, and they want to replace assets with operating expenses from an accounting perspective. The move to the cloud can dramatically improve return on assets by reducing both assets and expenses.
Right. And so that's a very interesting point about the effect of the pandemic on cloud adoption. Have you seen this impact traditional managed service providers? And if so, how?
Well, I think it's definitely been an adjustment, and that some providers are probably doing better at it than others. They've definitely had to keep pace with these trends, which have resulted in them taking on new roles as their old IT outsourcing deals have become increasingly fragmented. The managed service provider who used to perform soup to nuts IT functions may be acting more as an integrator of various SaaS and as-a-service solutions. And in particular, we've seen a lot of clients seeking new solutions for network monitoring and security. In many cases, this dovetails with clients' desire to reduce risk by having independent providers for security services versus general IT. The security as a service provider can oversee and monitor what the IT provider is doing. And beyond the security sub-trend, these trends are generally being driven by the need to build resilience into software and hosting as companies have had to adapt to more remote workforces. Companies are recognizing the need to connect with customers and employees online, not just through building their internal networks, and that's driving more and more cloud transformation.
Oh, great. Thank you, Joe. One of the side effects of cloud computing has been to dramatically lower the cost of gathering and storing data. That's meant an explosion in the amount of data stored and a move from data mining, as it was once called, to data analytics, to the now hot trend of data monetization. For this, I'll turn to our partner, Marina Aronchik, who's worked recently on numerous data lake and data monetization deals. Marina, what do you expect to see for 2021 in your neck of the woods?
Hi, Julian. Well, as you said earlier, 2020 and COVID-related challenges created really a new world where much of the economic activity now happens online. So in this new world, companies are really facing increased pressure to make existing businesses more profitable and to create and to implement new revenue drivers. One of the most promising ways to achieve these goals is by monetizing data. I think that in 2021, we're going to see more companies making data monetization initiatives their strategic priority, and they're going to be turning data into a core asset and viewing data analytics as a core competency for the company. To move quickly in this area, most companies are going to need to work with big tech, so these large technology companies, on infrastructure solutions to create and then to house data lakes. These data lakes are going to be pulling data that the company already has, but that data may be sitting in a silo or in a number of silos. And they're going to be enriching that data with data from third-party sources. And as Joe mentioned earlier, and I agree with him, most of this is going to be happening in the cloud. I think we're also going to see companies going to market to acquire data analytics capabilities. And they're going to be looking to bringing to bear the value of data in these data lakes that are created and the strength of data analytics to create new data-driven and often customer-facing technology offerings. Translating all of this to what it means to lawyers and the deals that we can expect to see crossing our desks in 2020, I think it's really going to be a gamut of technology building blocks. And those building blocks might range from traditional SaaS cloud contracts to high-level concepts that need to be translated and negotiated as part of a bespoke collaboration agreement.
Is there anything unique about a company working with a big tech company on a data monetization initiative as compared to, say, any other cloud services?
Yeah, absolutely. I think one of the key trends is that traditionally, if we think about it, big tech companies really served as technology providers. And now what we're seeing is those same companies are looking to compete in new markets. They might be offering medical solutions, for example, they used to be in the domain of a pharmaceutical company. So access to data or big data tends to serve as a barrier to entry for these new markets. I think this means that as part of negotiations of these sophisticated collaboration agreements, or perhaps even as part of the evolved cloud service agreements, we're going to see increased complexity in allocating rights to data that's stored and that's processed by these technology companies. This trend of moving to the cloud and increased emphasis on driving revenue through data-driven products will make it more important for companies to find ways to manage the web of rights and restrictions on these various data sets. And I think that that's going to be important for a couple of reasons. One, companies need to protect their own data and IP rights on that data. And they also need to ensure compliance under third-party contracts as well as privacy laws that Leigh discussed and other laws, particularly for companies that are in the regulated industries. So this is a complex endeavor and one that some companies are further along than others, but it requires you to bring together lawyers, compliance specialists, data scientists, procurement, and IT departments. Some companies, as I mentioned, are tackling these issues in different manners, but I think that we can expect most companies to make significant advancements in thinking through these issues and thinking through practical ways to solve and to manage these challenges to protect data-driven revenue streams in 2021.
Thank you, Marina. So cloud created the means to monetize data, which fuels the passion to create platforms that aggregate data as they process transactions. We are therefore hearing a tremendous amount about fintech, insurtech, health tech, prop tech, and other so-called X-tech companies. On this, I'd like to turn to Rohith George, who practices in Northern California, a hotbed for the X-tech revolution, and these platform companies. Rohith, what are you expecting for 2021?
Thanks, Julian. If you've been following along, with our podcasts and our webinars, you'll know that we've been harping for a number of years about this macro trend that we've been seeing among our clients toward digital transformation, meaning transforming the way value is delivered to customers in the digital age. And for some companies that are born and raised digitally native, like some of the fintech, health tech, prop tech, or XTech companies, as you called it, for those companies, no transformation is necessary. Doing business digitally is kind of built into their DNA. It's part of the ongoing process. But for other companies, significant transformational change is necessary, starting kind of on the back end with upgrades to important enabling tech infrastructure like Joe and Marina discussed, and then on the front end with improvements to their actual customer-facing products and services. And what we've seen, and as others have mentioned, is that COVID has only increased the urgency for these companies to begin and complete their digital transformation projects.
Okay, so interesting. We're starting to see how all the pieces are starting to come together in very complex configurations. How are these companies, the ones that do require some level of transformation, how are they accomplishing this?
Yeah, well, one way is to simply build everything from scratch in-house. And the issue is that takes time, and it takes innovative developer talent that isn't always sitting ready to go in-house. So what we're seeing instead is a combination of approaches. Companies are digitizing their data, as Marina talked about. They're moving more and more of their systems to the cloud, as Joe talked about. They're continuing to develop and improve their products and technology on their own and with the help of managed service providers, as Brad mentioned. But in addition to all that, what we've been seeing, and the trend that I'm expecting to see continue in force in 2021, is an increasing number of collaboration deals with the newer digitally native companies that we were talking about earlier.
Collaboration deals. What do we mean by that?
So when a tech company is a B2B service provider providing IT services to another company, whether that's providing a SaaS solution, licensing software, providing managed services, those are all fairly straightforward services deals, software and services deals. However, when a tech company's core business is actually provide services to end customers, and those end customers end up being the same as the incumbents, well, then the tech company can be considered as much a competitor as it is a service provider. A deal, between those two companies is what I'm calling a collaboration deal for the purposes of our discussion.
Got it. So then what is the motivation for the incumbent companies to collaborate with their competitors in this way?
Yeah, good question. Mainly access to an entirely new digital channel without the time or dollar investment required to actually build that digital channel itself. So, as an example, a fintech and a bank may collaborate on a home improvement loan program so that they both leverage the fintech's platforms to source new loans that are then written by the bank. The bank gets access to a new channel. It gets the use of a state-of-the-art platform with perhaps, features like instant decisioning, and it reaches new tech-focused customers that it may not have been reaching otherwise. The fintech also, is able to provide services to a broader range of customers than it would be able to do on its own. And then the parties each share in the upside of the program. But, that's just one example. There are a number of different forms these deals can take. A health tech company that's built a personal health ecosystem may be interested in partnering with incumbent healthcare providers to provide healthcare services to their customers. An insurtech may need to partner with an insurance company to offer a new type of insurance policy to its customers. All these types of deals, involve the digitally native tech company acting not simply as a service provider to the incumbent, but as a collaborator that has its own customer relationships that it wants to protect. And, that results in a number of unique issues that have to be worked through around customer data, as Marina touched on, antitrust, and more. But there are interesting issues, and we expect to be encountering them a lot in 2021 as incumbents look to these types of deals as part of their overall digital transformation strategy, and as tech companies continue to expand the types of services they provide and as they seek new partnerships.
Thank you, Rohith. A number of our prior speakers discussed how the aggregation of data and big data are driving digital transformation and can lead to new revenue sources through data monetization. Data is the fuel for artificial intelligence, and the two are interdependent. Without vast troves of data, there is no need for AI. Without AI, there is much less insight into these vast troves of data. Here to talk about some of the trends in 2021 for AI is partner Rebecca Eisner, who has been writing, speaking, and advising clients regarding AI trends. Rebecca, what do you see as the emerging trends for AI in 2021?
Thanks, Julian. Interesting how there's such a tie-in and connection with all the topics from the speakers who have gone before me here, and how AI can tie into all of those various channels of delivery of service. AI is going to continue to be an evolving and exciting topic in 2021. And I say exciting because the insights and improvements that AI can deliver to companies and individuals seem unlimited at the moment. AI is becoming commonplace in consumer apps that we use, and AI tools are and will become fundamental to businesses to fully utilize their data, to gain important insights, and to create competitive advantage through those insights and functionality that's enabled through the AI. But there are still many challenges that have clouded AI through the prior developmental years, and some of those challenges will continue to cast a shadow in 2021. Importantly, companies that recognize and address those challenges early in their adoption of AI stand to maximize the value of their investment in AI and reduce their risks. So let's talk about what some of these challenges look like. Well, first and looming is the continued uncertainty in intellectual property rights protection around AI developments. In the US, our laws are written to protect human creativity versus machine creativity. And so you can understand how this presents challenges for creators of AI who are seeking to protect the rights in what's being developed. Second, we have immature markets and really a lack of understanding regarding necessary contractual allocation of rights and obligations between AI licensors and the licensees and end users in the components of AI. And those components include the algorithms, the training data and the instructions, the production data, the production outputs, and what I call the AI evolutions. Those are the insights that you gain through deep learning improvements that are made by some AI applications. So these issues can lead to a loss of valuable rights and protections for creators, licensors, licensees, and users of AI if the parties are not careful to dissect those and to allocate appropriate rights and responsibilities around those AI components. And third, we've got the issue of legal compliance and how that impacts the use of AI. That is going to remain a very challenging issue for AI creators and AI users. A lot of AI creators or licensors may seek to put responsibility for legal compliance on the user of the AI licensed product or service. And while that might seem logical because licensors are the ones who take it and use it in their particular environments and perhaps with their own data sets, it becomes a problem for licensors who may be unable to explain the logical decisions and the outputs that are being produced by the AI, or worse, those decisions may run afoul of legal and regulatory obligations.
All right, so none of these challenges that you've described are small challenges. How are companies going to go about addressing them?
You're absolutely right, Julian. They're not small, and nor have they been solved yet. But there are some steps that companies can begin to take toward trying to solve some of these issues. So to address some of these challenges, creators and licensees of artificial intelligence are beginning to talk about AI in a risk-based framework. And maybe an analogy would be helpful here. So by analogy, a lot of companies needed to evaluate their data capture, the way they use data and disclose data to third parties, and ultimately to memorialize acceptable practices around that through data policies and procedures. So for artificial intelligence, companies are beginning to think about AI uses in a similar way. We see companies like SAP, Google, Accenture, Microsoft, and Intel, for example, as early thought leaders in developing white papers, policy positions, or actual policies regarding the use of AI. Deutsche Telekom has developed an extensive policy regarding digital ethical guidelines for the use of AI. And Deutsche Telekom encourages other companies, associations, politicians, and citizens to discuss these ethical questions. In 2021, we anticipate continued and broader discussions regarding the use of AI and its social, ethical, and responsible uses. And because AI is becoming a social and ethical issue, the way that companies use AI may become a CSR, or a corporate social responsibility issue for companies, much in the same way that privacy, diversity, and climate change initiatives are now used by some to evaluate investment choices by investors who prioritize these topics. So, if your company's board has not yet been briefed on the use of AI, your company might want to look at the framework that it's using for managing risks and the organization's policies and practices to ensure ethical and legally compliant use. And 2021 will be a great year to try to check that box. Companies may want to prepare for this briefing by appointing a task force, a group of cross-functional folks who work within the organization to study the issue. How is your organization using AI? What's currently in-house? What's being developed? What might you be using through your third-party providers, such as your managed service providers, your cloud providers, your platform providers, et cetera? Gaining an understanding of all of that. And then working with industry consultants who really know this area, coming up with a set of recommendations that ultimately may lead to policy and practice recommendations for a company or even its board to consider. An important part of that task force study will be to examine the artificial intelligence that's licensed into the organization from third parties, and how that organization may work with those licensors to better understand the licensor's own policies and procedures regarding the AI that they're developing and licensing. So this is going to continue to be a rapidly developing and very interesting area to monitor in 2021.
Well, thank you, Rebecca. And Brad, Lei, Joe, Marina, and Rohit, thank you all for your insights and really helping us understand how all of these pieces fit together, and that there's really no way you can try to understand any one of them without trying to understand all of them. And thanks for that glimpse of the near future. I hope it serves us well. Listeners, if you have any questions about today's podcast or anything else related to technology, transactions, and the law, please email us at techtransactions@mayorbrown.com. And thank you for listening.
We hope you enjoyed this program. You can subscribe on all major podcasting platforms. To learn about other Mayor Brown audio programming, visit mayorbrown.com/podcasts. Thanks for listening.